The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon on market days. And wow, questions away all over the show. This is really an important phase. I'll tell you why it's an important phase, not just technically, but I'm hearing a very big put down of all those people that have been calling for a correction, number one. And then I think it was Ralph Acampora, who has a very mixed record, sometimes really great calls, sometimes not so great, but he has been a bull for quite a while, one of the older technicians, and was calling for a 20% correction in a major bull market. I actually see no reason why he should be put down for that. I believe we're getting closer and closer to a pretty good correction. And at the same time, my monthly charts are saying, you know what, you can't rule out higher prices moving on. But that's really not the issue. I'm showing charts right now of the bonds. This is the bond June contract. Just for the moment, I'm going to switch to the, if I can find it, oh, I didn't mean to do that. I'm going to switch to the continuous contract. I need to show the bigger picture. Leg E in the daily, that's the same as the contract itself, the futures. And it's leg D this way in the monthly, in the weekly chart. And the monthly chart has a really interesting pattern. It is broken above the consolidation. How can I explain it if you're listening and you aren't looking? Imagine a channel line that I call the inside track support zone within a larger channel, up channel. And the price has periodically, for either a year or more, or sometimes for quite a bit less, gone into that up channel, hugged the bottom part of the channel, made slightly higher highs, slightly higher lows, until it broke to the upside. GE, on a weekly basis, did exactly that same thing. I'll show, because a chart is a chart. Doesn't matter what we're looking at. Let's just put it right here. Look at this chart here of GE, weekly chart. See that GE did that and has gone from February, I think it was, February, the week of the 7th at 24.32, higher highs and higher lows within that support of the up channel and within another channel. So let's go back to the bonds, because this is really an important moment for a number of reasons. Within the context of bonds moving up in the monthly chart, I'm going back to the continuous contract only because I've got it going back. I used to have it going back to 1981. I don't know what happened to it. How am I going to get that back? Well, it's gone. Meantime, this up channel is seeing a breakout from a trough C, and this is leg B, and it's about to challenge, bonds are about to challenge the 140.5 resistance in this particular contract's continuous look that smooths out. The highs are the highs and the lows are the lows. Prices may change. Occasionally we'll find that there's just a very different chart pattern in the continuous contract to whatever I'm looking at. But if you are looking at this particular contract, the reason why I have to consider it a counter-trend rally is that from the major high, I won't give you the price, but the major high In this case, I have got it as 146 and 230 seconds. You could have something else, but this is smoothed out. But it is the price major high of July of 2012 down to this low of September of last year at 125.5. You might have a different price. There has been a rally in price, a very good rally in price. But because of the damage done with that year, the year of declining prices, the stochastic went under 20% and now is at 45% of rallying. On-balance volume is rallying, relative strength is rallying, but the MACD has not yet crossed positive. And that's important because the histogram is at minus 0.34. It needs to get to plus. And that will confirm that bonds can go even higher. But in the meantime, very nice rally in the monthly. Leg B, grey B, because it's way under the previous high. Leg D recycled in the weekly after an instant restart right there. And the daily is in leg E. But here's the difference. This leg E is very strong above the previous high. Day's not done, but at 138 and 430 seconds. Let me go. Now I'm going to go to the contract itself. Previous high was 138 and 430 seconds. Today's high is 138 and, let me get this right here, 138 and, there it is, 138 and 1930 seconds. I've got the 120-minute chart in a powerful leg F. It could have recycled. This could be F/B. At this point, I don't feel like putting F/B because it does look somewhat overextended and it should pull back, and at that point I'll make a decision about what it is. F would be very negative if there's a pullback. B would be very positive. You know what? I will do that just because I like things to be as clear to people looking as well as listening. F/B with an emphasis on the F. Now, what does this say? When I said to subscribers of my opening call, and one of the reasons we started to raise the stop quite a bit on our long position of the Qs, which I thought would be the leaders in this counter-trend rally, and they certainly have been. One of the reasons being we are on the cusp of a bunch of things. Now I'm going to try to put the whole picture together. Keep in mind bonds are acting really well, and I'm going to put this in, I hope it works out. And the bond, my triple bond yield chart, which I show subscribers every week, or just about every week, actually today went to a lower low, and that makes it a very quick trough C to trough D, now to trough to leg E to the downside. That is, I don't recall ever seeing this in bond yields. I've never seen a D go quickly to a C to a D to an E. No, I'm looking at the yield. I've seen a quick D to E. Oh, I have seen a C to D to an E, but there was a much greater decline from the trough C, and that was way back in 2011, the week of September the 9th, where the trough low was 31.86, and then trough D was down at 27.52, and then it finally made a pretty decent low at 27. Why would that be? Oh, right there at 26.94, before having a pretty darn good rally to 34.90. Quick ABCD and a pullback to a low of 25.10, and then 24.52 back on the 24th of week of the 24th of July of 2012. Then you had that monster move up to 39.74, 3.97%. So here we go. Let's see. So that, yes, and now you've got leg C on the downside in the 10-year. Now that should impact the yields in relation to the price of mortgage rates, and that should be helping the home builders. So let's move this away, and we're going to go to WOOD, Wood, which is the iShares Global Timber and Forestry ETF. See, it's climbing away from the inside track support, but the HGX, the actual the Philadelphia Housing Sector Index weekly chart trading at 199.91. That's so far, that is really not very attractive. Just a little bit of a bounce. So I'm going to try to sum it up here. In fact, what I'm going to do is I'm going to go back to my Dow daily chart right there, and I'll explain what my subscribers got this morning and what we're looking at. The Dow right now is down 21 at 16,653. It has to go to 16,736 to make an all-time high, and that would help the weekly chart. And at that particular point, the reason why I'm saying cusping is we'll look at all the different charts and you'll see what I'm looking for. Even if it's just a short-term pullback, I'm suspecting we're getting closer and closer to one. So this in the Dow, if there's no new high today, and that's a little surprising to me that we haven't gone above 16,688.69, the high of yesterday. If we do that today, extends this leg gray A. But the moment that the Dow, if it does, and I suspect it will, goes above 16,735.51 by 1 penny, that starts leg F. It reintroduces the previous high, leg F / whatever it is, A or B, with an emphasis on the F. And then an emphasis on the stochastic, which is only at 66%. I suspect at that point it'll be at 69, maybe 70%, 71%. And the stochastic, the MACD, would probably have just crossed over, but not very powerfully. And that's saying to me the upside is limited right here. And you've got to be very careful. It's very selective, this particular move to the upside. However, on the shorter term, so let me go through the numbers. The Dow is down 23 at 16,650. S&P is down 2 at 1910. It's actually down 1 at 1910. The comp index is down 9 at 42.27. Gold is down 8. What can I say? I will go to the gold chart just to say I've spoken about this for so long now. GLD is just took it on the chin. Here it is. Let's just go to the GLD. Remember, I drew the arch pattern. I said it's almost certainly, as far as I'm concerned, going to make a C. I don't know if it's going to make a B minus like it did before. I see a maximum of a C. I see the 200-period moving average of 133.96 as major resistance. And in fact, we haven't even gotten there. We've started on the way down. And that makes the monthly chart, and I've been talking about this for so long, I felt like I was on a desert island there, because I must have been the only one that had been talking about a rally failure with a chance that it arches over, and that if I'm correct, well, I can't say the only one, I don't know. It just felt like that, because every time I tuned into something on one of the programs like CNBC or Bloomberg, people were talking about gold is still going to be okay, and I don't know. I think gold is, as far as I'm concerned, is going to test. There's a good chance that GLD will test the 102.28 low of February the 26th of 2010, and could do that as soon as December.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Basil Chapman, Tiger Technicians Hour, and so this is those are the numbers that I wanted to give you. Let's just look at the dollar. You see, the dollar was going to leg E. Whoa, did I just type in the wrong place? I just keep doing that. Okay, here we go. DXY. Yes, leg E above the 200-period moving average of 80.41. And what I've been saying for quite some time is that I wasn't impressed at all with the dollar at that particular stage, but there were signs that the dollar was acting very well. And the moment it broke above that peak B high in the index itself of 80.18, was made in the 13th. The moment of 15th, it broke above it. I said, now the 200-period moving average at 80.41 is going to be very important. But more significant than that is that the stochastic is finally flattening out instead of giving that big pop-up. And we've got to watch out it doesn't pull the same stuff as it did back in January, where stochastic went like an M pattern above the 80% level and then collapsed. This one so far looks way steadier. I'm watching it leg E, where you've got to be somewhat careful. Meantime, back at the ranch, I can't talk about the monthly chart. I can just say that this is very good action on the weekly. We'll see how it closes on Friday. But you see, we broke a downtrend resistance line. You know, when a downtrend resistance line is very long, I look at it, I always put it in, but I tend to think of it as an absolutely minor occurrence. If you take time, eventually you're going to break that line. What's the big deal? It's what you do on a retracement. If it turns out to become a support instead of a resistance line, suddenly it becomes very important. But just to say, oh, yeah, this is a major break, it's not a major breakout at all. A major breakout will be, this is the second week above the line. This is only the first week so far. The week's only halfway through, not even halfway through, and we're above the 200% line, 200 period moving average line. I want decent closes for 3 out of 4 weeks, and then I'm saying dollar finally is making a turn, and that says that the Fed has lost control. They've lost the little hammer, that whack-a-mole, bap, 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 on the dollar, because dollar, if it breaks 81.50 in June, that would be the first monthly big positive that we've seen, starting a counter trend leg A up in the monthly chart. A lot of ifs there, but that's the scenario. Now, this is what I'm talking about when I say cusping. When you look at the euro pulling back this sharply under the 200-period moving average, and you put it together with gold pulling back, you're going to say to yourself, wait a minute, if bonds are continue higher, that's implying that money is flowing in bonds, and usually, not always, but usually the implication is that money is kind of coming out of the stock market. It is migrating into the bonds, the safety, I love this, the safety of bonds, giving you a yield that is just pathetic, but it's the safety of bonds. That's what people perceive. And at the same time, look what we're at. Here, look at the cues. Leg D, with just a little eye blink of a pop that's needed to get the 91.37 level to break new all-time high. Oh, sorry, I should not say that. A break to a new 13 or whatever it is, 14-year high. But it is leg D. There's a left side, right side price time match, which has taken us, what's the high today? 91.04. So I can move this away, and I can put that right there. And what is that saying? It is saying that the little squeak that was needed is still not there to get to a new all-time high. And the reason why a new all-time high will be so important is that the gray leg B in the weekly chart will immediately become E/B if it happens this week. And saying you're getting close to some kind of a pullback or breakout, that's the importance. That's what I'm saying. We're on the cusp. We're in the cusp of making a normal new high in the Dow and then having a pretty decent pullback. I'm talking double percentages or anything like that. I have no idea. Not at this point. I can guess, but guessing's no good right here. So what will that do? That'll start leg F, could be /B, in the monthly chart, with the MACD still very strong, relative strength starting to pull back, on-balance volume starting to pull back, stochastic starting to pull back, and that says, whoa, be a little careful here. Now, when you put it together like that and you look at the momentum stocks, oh, and let me just add the 120 chart, which is in leg C to the upside, having recycled, and putting it together with so many of the other stocks. Did I just look at the Dow? I think I did. I'll be right back. Oh, I think I showed you at one of the breaks. I'll show it in a few minutes. I'll show you why this is a very, very important. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman here. This is the Tiger Conditions Hour, Dow's down 24, S&P's unch, and we've got Lou in Fairfield, Connecticut that I drove by just the other day. Hi Lou, how are you?
Hi Basil. Hey, listen, the bond market's doing well because the Fed's buying up more than the Treasury's putting out.
Okay.
This is sincere on the numbers, the way they work. That's why the bonds are doing well now. It's all about buying and selling.
Certainly.
And they're buying up more than they're selling. Well, a bigger percentage. Let's put it this way. They were buying 60% of the Treasury's bonds. Now, even with them backing off, because we lost the Bush tax cuts and all the other stuff to create more income, they're now buying about 80% of the bonds. So it's all about supply and demand. The Fed's buying them up. It's a rigged market. Now, last month I said that the European markets were oversold, and then we got this Draghi thing coming in. And how far can the Catalan and the DAX and all these other ones go? How much further before they can get turned around? That's my big question here. Because they're waiting for, Draghi's supposed to come out with this break the rules and do quantitative easing. So that's why the market's all turned around. And as far as that, what technician were you talking about before?
That was Ralph A. Camporo.
Now, I met Ralph personally. I know him personally. He does long-term trends in the market.
Correct.
So when he talks, it's all about long-term. People,
Yes.
Look at Bud. They spent $1.50 for Bud. They're listening to Ralph for free. Give me a break. Everybody isn't, nobody's got one crystal ball. We're human.
I agree with you. There are a couple of things that I should also add. When you're listening to almost anyone, the most important thing is to say to yourself, how does it apply to me? If they are correct, is there any change that I'm seeing that I feel I should make my portfolio that corresponds to their thinking, because their thinking is very much what I'm thinking? That's the most important thing, because you want a degree of comfortability in your positioning in the market. That is really the most important thing. Now, there are some people whose recommendations to really go strongly with because they've had very a consistent record of success. And then there are also other people. I used to use Granville way back in the 70s. I figured a way to do my own work when I went back into the stock market, having initially been in as a teenager back in South Africa. And then I went back in, and I found that with my own work, the Granville signals were just perfect. And he was outstanding because we were having, it was a period of inflation, and we had 3-month rallies and 2-month declines or 6-week declines, and he would give buys and sells, and every time he would say, this is it, this is the major sell signal, we're going down, he'd name some price, and then he would at some point switch, and his newsletter would come out, but he had already given a turnaround in the market, and then market, and I hardly ever subscribed to him because he's, whatever was stated in his newsletter was usually announced by the market and by people later during the day saying, oh, Granville did this, Granville did that. And then in 1980, I'll never forget this, I'd just gotten into options, and I did the dumbest thing. I'd done really well, and I took some money and I put it into options, and then I went to visit my family in South Africa for, I think, 2 weeks or something. I had no contact. I thought that I could get information there. There was a piece of information on where the Dow was. I think the newspaper would have something about the Dow and the S&P up or down. That was it. That's all I knew. And there I am, and I came back, and he had just given kind of a signal. Well, I learned from that moment on that what you want to do is to get to know what people are, analysts are really, really good at. And that's, you only use them for that specific purpose. And usually, for me, it was only if it coincided with my own thinking. And since I don't have such a great memory, I usually would forget almost immediately what was said because I'd be doing my own work. So I wanted to just speak to that issue to say that there was a period where Ralph was very strong. I remember going to when I was involved with Fidelity as a technician. I remember going to Fidelity, and very often I see Ralph Camporo there and a whole bunch of others that you see on TV. But I learned that you're absolutely correct. Certain people are certain good at certain times. Certain people have different perspectives. And one of the reasons why I learned not on the tennis court to say, oh, we're going up, we're going down, is because the very next time I had a change of direction, excuse me, if that person wasn't on the tennis court, they'd still be in the wrong position. So I am
Everybody
now very,
got their
very
day
careful.
in the sun.
I'm sorry, what?
Everybody got their day in the sun.
Absolutely. And sometimes, because the same rule as a broken clock being correct twice a day, you know what I mean? So I think it's the veracity, it's the way you approach the markets, the consistency you have, the technique that is the most viable, the one that has the longest longevity. That's really what you want to stay with. And even then, sometimes, and I do that with my own work, I say we've got an F/E or an F/B. Well, one could be very negative if there's a turn, and one is really positive because the next pullback, you want to be buying, not selling. So
Right.
I discussed that in terms of moving averages, MACD, stochastic, and that as long as I've got an alternate wave count to the upside or the downside, it means you can stay in that position up until there's a verification that you're either right or you're wrong. And I like, because it says, I'm aware that there's another side to this particular picture, and this is what we'll be looking at if there's going to be a failure. Very good point. So, Lou, you wanted to bring up the foreign markets. I do get the data somewhere. I just can't remember what the symbol is. But I looked at the EWs, that's the ETFs. And I have to tell you that like the EWU, which is the United Kingdom, is in leg F in the monthly. I've got it as a B in the weekly. This is really interesting. And the daily is in a high-level consolidation, like an oval pattern, and an E, and it says there are certain parameters that you can look for. But that's a different chart pattern to the actual FTSE 30. So I don't want to. I just want to say that that's the only way I'm getting it. For instance, if I want to go to
the CAC, you know, I love the CAC. They raised the taxes on all their billionaires over there. And they said the market wasn't going to go anywhere, and now the market's making new highs. I love these economists.
You know what?
They really make weathermen look good.
I got a very good cartoon about that I drew ages ago. Oh, it's in my book. Let me see. Yeah, I think it is. I'll try to find it during the. Oh, there it is. Slide 247. All right, I'll show that one in a little while. But I wanted to just, there's another thing I wanted to mention, Lou, that it's so fascinating. You know, talk about France. We talk about, I know I've a neighbor who worked there for a long time on a very big project, and he said there's just a different attitude. Every opportunity to take a break, these guys take a break. And I'm saying to myself, geez, I hear this all the time. But I defy anyone.
Yeah, that's why Jeff Immels trying to buy all the stuff up over there.
Yeah, but I defy anyone to look at the EWQ, which is the iShares France ETF, and tell me whether they could tell what country it is. It's like any country making a recovery high. So it's fascinating that the charts don't say whether or not, how people work or whatever. It just says, this is the chart, analyze the chart. Hey, thanks, Lou.
Love you, Basil.
Keep in touch. Always great to hear from you. That was Lou Folks in Fairfield pointing out a couple of very interesting facts, and certainly the European markets. I don't have it in front. I have it on my little iPad thing, whatever it's called. Maybe I'll try to get it during the break and check it out, because I did want to look at the DAX. Yeah, the EWQ, France is almost close to getting that leg. Just like the DAX, it needs another leg, except it's not at all-time highs. That's the big difference. So, now, let's do a couple of things here. I wanted to talk about why we're cusping. Because if you look at the Qs, this is fabulous 10%, 83 going to 91, coming back from 91.36, the high of May the 11th, was that? May the 6th, 7th, somewhere around there. And in the same, well, it's not the same time frame. It's a little bit longer. But isn't it interesting? Now, the big question is, have the momentum, this is the only question as far as I'm concerned, have the momentum stocks made significant lows that they are not going to go back and retest their recent lows of, in this case, Google's at 563 in leg C, having made all-time high at 6, what was that? 6, I don't know if it was the all-time high. 614.44. Let me just check. 614.44. That was quite a move. 114 points. 614.44. peak D, comes down, makes a double bottom at 502.80, retest successfully at 503.30. So this is actually leg C. Has this begun a brand new move at 97% in the stochastic, MACD expanding, but the weekly chart looks terrible technically, but price has been pretty good. And the monthly chart, I'm pretty sure that's a peak that we will not go to the all-time high, but it could certainly go quite a bit higher. Look at price PCLN. Look at this. Price line, whopping leg B, given a almost a 50% retracement from the high of 1378 down to a low of 1087.26. 7.26. I think that's what I said. I'll have to check that out. And now it's trading at 1267, up 200 points. That's 300 points. That is from the low. That is really important, leg A. If these guys are about to fail, then this is a significant moment. Now, this is what I wanted to talk about. Isn't it fascinating? You've got bonds, the TLT. Let me just check the TLT. TLT was at peak C. Bonds had already made a peak, but there it is. Folks, I hope some of you took advantage of the offer. It's not there anymore, but that offer of the webinars, because those two webinars on moving averages, etc., are really important. But I also want to tell you that learning to have the patience to get to a leg D is just an uncanny thing. I cannot explain it. I've been doing it since the 1980s, and it boggles my mind every time that you think it's all over, yet that C does go to a leg D, and that's exactly what bonds have gone to in the TLT, leg E in the weekly chart. And now what's fascinating about this, that in the TLT's case, it is about to break above that trend line that we spoke about in the bonds, which bonds had not yet gotten there. So here's the cusping aspect that I'm talking about. If bonds are only in leg D, in the daily, leg E, the TL2 with the 20-year T-bond fund, leg E in the weekly, leg A in the monthly, it would imply that if there was a pullback here in the market, that there's a pretty darn good chance that money will flow, more money will flow into bonds, and yields will come down further. Well, isn't it interesting that the TLT is at a recovery high? Look at this. Nice recovery high going to that very ugly candle, the start of the ugly candle of the week of the 7th of June in 2013. And that was a high of 116.79 and a low of 113.16. That's the candle that it's trying to tackle. That's the one that I use for the left side, right side price time match, which it hasn't got to, but it is now 1 week extended. I'll have to change that a little bit, and I'll have to use this as a guide. I won't do it right now. I wanted to finish my thought. That at this level, if more money was to come into bonds, that would be an incredible thing. And as mentioned to me in the den, the interesting thing is that there was some chatter last week that someone large was closing out a position in bonds last week and got caught on the wrong side. But that was just a rumor, so there were no real facts. But all these things, all the rumors kind of crop up. And if that's the case, it's so unusual to have this kind of power in bonds at the same time as you've got the power in the stock market. That's really the point I wanted to make. When I'm saying cusping, I'm saying gold is broken down, so the dollar is finally able to potentially break out. We'll follow this train of thought as soon as I get back. Basil Chapman, Tiger Technicians out. Don't forget to open and call, comprehensive look at the markets, plus trades. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. So this is the final segment of this one. Then you've got Larry Pesavento. Should be one of the shows always with Larry. Got shows right through the day. And of course, 4 o'clock till 6 o'clock, a wrap up with Tom O'Brien. Now, what's really important about what I'm looking at now, I've got the EEM. I just wanted to finish the thought on those foreign markets. So this is the emerging market index. It's in leg D in the weekly chart with very strong MACD, stochastic at 92%. Monthly chart leaves a lot to be desired in the sense that it's really gone nowhere, but it is making a very unusual chart. It keeps making H pattern that turns into that worm, the lowercase M pattern. Oh, I forgot to get the my CD up for that cartoon. I'll try to do that dollar cartoon. The weather cartoon. I'll do that for tomorrow. Cartoon. Okay. And it's making lower highs and lower lows in a narrowing going to an 8, but there's a chance that in the monthly chart it'll break. It's the 42.95 up 18 cents right now. If in fact it takes out next week or the following week, takes out 45.70. That's 3.9. That's kind of a lot for this thing. But if it does that, that would be the first breakout. That's like the dollar looking at. That's very important. Number one. Number two is the weekly chart. And let me just open it up. It's much better to look at charts. You see, actually, it's just as well because that line is there. That line is there. And what we're looking at is that this is now a safety area between 40, 42 to 41. I'm going to go down a little bit. 40.60 is really the cushion for the EM and the weekly chart. Most importantly, the daily chart had an alternate count, G/B. Emphasis, at least for now, just on G. But my suspicion is G/C, sorry. G/C. That's really important. Why? Because it says that holding the period moving average with the MACD still okay and the stochastic at 88%, there should be one more pop-up at least to a high of above 43.29 to make leg D. That's what I'm suspecting right now. And I could put an oval pattern in as well, just to make it as clear as possible that this is also a potential Chapman wave stalk leg formation right there. A little deep, but that's the way it is. It's good. Okay, so I wanted to get that. Now, when I'm going through the shows, I almost forgot. I usually forget on a Wednesday because it's a little unusual. But at 6 o'clock, you've got Tom and Ali Ford in Mindful Living. It is a fabulous show. I really recommend you listen to it. Please don't forget. Just stay tuned all the way through till 7 o'clock till tonight. Now, let me just run through the numbers. The VIX index. The volatility index is still in the 11.56. Normally, you get 4 or 5 days under 12, and you get a big pop-up. This is different because I've got a flat stochastic at 4.92. Some news is going to have to come out very suddenly by the next end or next week to really change this and the VIX into the high 13s, 14s to set off any alarm bell that says, okay, short-term top unfolding. At this particular point, it is buying pressure, and that, at least for now, at this particular point, remains as buying pressure. So VIX in the lower 11s, buying pressure. VIX in the upper 12s, 13 says, hey, be careful, pullback is underway. In the Dow itself, I'm anticipating that it goes to 16,736 and higher. That's my target. And at that point, we're going to have to make decisions. D in the weekly, E in the monthly extends. It means you've got the whole of June to see whether you're going to break above that level of May. A lot happens. Underneath 16,300, we're at 16,650 now. It's almost a 3-point decline. But it's underneath 16,300, I start to get cautious and say, hey, this is it for now. Be careful. Because we've made some kind of short-term top. Just make it as simple as possible. That's the way I'm looking at the market. Meantime, we should go to higher highs. Stay tuned for Larry Fitzgerald, and I'll be back tomorrow. Have a great day. Basil Chapman signing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN,